Citadel Securities today handled 3 IPOs alone, or 3 listings alone. We don't remember the last time that's really happened. It's certainly been a long time. Pete, are companies just trying to go public before the U.S. election here? What's going on with all these listings?
Well, first, thank you very much for having me on. I'm excited to be here with you today and to get a chance to talk about, what's going on in the IPO markets. It's an interesting time. We saw a little bit of a slowdown in the IPO markets when the pandemic first hit in early March. But even through that time, as an organization, we were selected for 12 out of the 14 IPOs that listed during that time. I think it's interesting that companies are coming to the market now. There is a lot of appetite for companies in the market right now. The IPO pipeline is robust. As you guys mentioned, the Spac pipeline is really robust. We've been selected on 85% of all the Spacs that have listed on the New York Stock Exchange. We've also been selected on 78% of all the stocks that have been listed on the New York Stock Exchange for IPOs. So a pretty exciting time for the markets.
Right, but to the point about the election, we do right now see volatility elevated. Is the worry here that it will be more elevated later in the year? Why is right now the time that people are choosing to list on the exchange?
Yeah, I think that there was obviously some pent-up inventory coming to the market when we had the shutdown. Obviously, with a traumatic time that's happening around the world at that time, the world really did stop in its tracks. So I think we're starting to see some of that backlog come to the market. That's why it's so robust right now. As we get into the election, whether it's a couple of weeks before the election or a couple of weeks after, depending on what the result is, we'll probably see a little bit of a slowdown. And then in the last part of the year, in December, we'll see those last companies trying to go out before the end of the year.
Pete, I was standing right next to you a little over a year ago, I guess now, when you have been working on Slack's direct listing. We broke last night that Palantir is looking to do a direct listing. How do you do a direct listing in a market that's more volatile? Are there concerns about it?
It's an interesting question. So as you guys know, there's basically 3 fundamental ways for a company to go public: the historical IPO, a direct listing, and now what we've seen is the SPACs as an alternative way for companies to access capital in the markets. And the direct listing fits a certain group of stocks, of companies that are going to want to use that process to go through it. And if they're not looking to raise capital, depending on really what the company's profile is and what the company is trying to accomplish, they're looking at how that happens. I would say this: with overall volatility in the market, depending on if the stock obviously has a historic background, it's been something that's well known, there's obviously a significant liquidity event. And as you guys know, on the New York Stock Exchange, we take a very thoughtful approach into how we open these. So I don't think that the volatility is as impactful as you would think.
So another thing that's happening in full force is the Spac market. I know you worked on Redbird Capital. That's the Billy Beane Spac that's listing today. And then there's also, you worked on Bill Ackman's Spac too. Why are investors doing this? Why is this so much more attractive than an IPO for some people these days?
I think that the way to really look at it is how the IPO process and how companies have had the ability to come to the public markets is evolving over time. And it's something that's going to continue to evolve. And I think what you saw was obviously the historical IPOs. Then we had the evolution into the direct listings. And now I think the third part of the markets is the SPAC piece. And I think when you look at some of the management teams on these SPAC teams, it's extremely appealing to some people to have access to be invested with some of those management teams and the decisions they're going to make on the capital they raised.
Now, Pete, I noticed you're standing on the stock exchange floor. Citadel Securities, you guys did operate quite well remotely for some time here. What's the vibe on the floor right now? Are you having to do listings a lot differently than you normally do them?
So, obviously as an organization, we pride ourselves on not only the fact that we have human traders on the floor, but that we have really, a high level of technology that we implement every day to help make deep liquid markets for the investing public and for our companies. We had a couple of secondaries today as well, with companies raising funds in the market. Mm-hmm. And it's really good to be back on the floor. It's good to see the people's faces on the floor. The exchange, as well as Citadel Securities, has taken a really thoughtful approach about the employees' health and the social distancing. So, we are operating as we did prior to the shutdown, just with a little bit more of a limited staff and relying a lot more on technology.